Hi, good evening. Welcome to those of you who have joined us this evening. Um, great to see people coming in. Um, Maybe I think what we're going to do this evening is we're going to wait for a couple minutes just to let people get joined. Maybe though, in the interim while we're waiting, if some of you don't mind just dropping into the chat where you're joining us from this evening, it'd be great to see where the representation is across the country and perhaps elsewhere. So feel free to drop into the chat. I see Shankar, thank you from Toronto, appreciate it. Randy from Oshawa, Arash, Toronto. Justin from L'Amable. All right. Okay, we've got lots of people from Ontario so far, which is what I would expect. Thunder Bay, Kitchener, Guelph, Vancouver, first West Coast. Awesome. More West Coast. Nice to see everybody coming in. Thank you so much for joining us this evening. We'll just give people a couple more minutes to join. Maybe if you want to add to the chat. Uh, if you're a landlord or a property manager, a portfolio of properties are you managing? That would be also interesting for us to share if people are comfortable doing that. All right. Thank you. Thank you. We'll give it maybe one more minute and then we will get started. 12 units. Frank, thank you. Landlord, Natalia. Let's see. All right, we got lots of landlords. First time, yeah, and obviously, somebody here with 200 units, 40 units. So obviously, too, maybe you are just exploring and considering getting into the business. So of course, we'll be happy to share some insights and some information with you wherever you are in your journey. I think there's going to be some great stuff to dig into tonight. All right, well, why don't we get started? So first of all, hello and welcome to Rental Market Pulse 2025, Understanding Tariffs, Vacancies, and Market Shifts. My name's Stephen Harmer. I'm president at FrontLobby. I'm going to be your host for the evening. It's great that so many of you are able to join us tonight. I see we've got some representation across the country, which is awesome. We're going to be looking at the rental market coast to coast. So I think there'll be some interesting stuff for everyone. So whether you're tuning in tonight from, on your phone between property showings, or if you're on a couch with a coffee or relaxing in your office with a glass of wine, I think you'll find it's going to be a good investment of your time to spend an hour with us this evening. There's a lot going on in the rental market this year in Canada, and we're here to help provide some clarity into what's happening, what's happened, and maybe take a peek around the corner and see what's coming up. We've got some of you are going to be new to FrontLobby. You're going to be coming because you're familiar with Door Insight. So welcome to you. And also welcome to all those of you who are familiar with FrontLobby. I know we'll have members, basic members, premium members. Some of you have been with us for years. So appreciate you all joining. I think this is really an educational session to introduce you. Might be your first look at Door Insight to understand the valuable data that they're surfacing and the information and tools that they are building and providing to Canadian housing providers. So no matter how you found us this evening, I think I'm confident you're going to walk away with some good insights, and hopefully you'll be able to practically apply it to your business right away. I'm not here alone, obviously. You can see I'm joined by the two co-founders of Door Insight. First, we have Tej Kang. He's the CEO and co-founder. Tej has got a background and is an expert in systems engineering, GIS, and analytics. He launched Door Insight really with the realization that it's very difficult to find a good source of rental property data in Canada. And he's been on a mission for the last number of years to help to change that. Alongside Tej is Harbind Kharod. He's the CTO and also multiple industries, but for the last 5 years, he's been focusing exclusively on helping solve challenges for landlords, for appraisers, and for property investors. He's also the voice behind the Popular Market Pulse newsletter, which some of you may already be familiar with. If you're not, I would suggest it's definitely worth checking out. Some great insights coming across in that newsletter. Together, Tej and Harbind have built the Door Insights platform by aggregating data from all kinds of sources across the country, cleaning that up and making it presentable and digestible for housing providers, for landlords, appraisers, property investors. And those insights are really what we're going to dig into this evening. And so you'll see some of that information firsthand tonight. Um, Before we jump into that, I'll just give you a little bit of an overview for those of you who aren't familiar with FrontLobby. Um, we are pioneers of rent reporting in Canada. We're here to help landlords protect their income, protect their investments by attracting quality tenants, by providing rent reporting tools, debt recovery tools, tenant screening tools. And we're really a platform on a mission to support small landlords in Canada and now into North America to help reduce risk and create accountability, with the added bonus of helping responsible tenants within your portfolios to build their credit through the rent reporting platform as well. So, whether you're managing a small number of units or a larger portfolio, we have tools that can scale with your business. And we're thrilled to have you here with us this evening. Just give you a little bit of insight into what we're about to jump into. So we're going to start, Tej and Harbin are going to start by presenting a market recap for the Canadian rental market for 2025 year to date. And then we're going to try to look around the corner or look into our crystal ball a little bit and see what we see the trends are and where we think the rest of the year is going for the second half of 2025. And then finally, we're going to obviously invite questions. And for those of you who haven't used the Zoom kind of question, you can see at the bottom of your screen, there's a Q&A with a question mark. You click on that, it will allow you to input questions. Please don't hesitate to put questions in there throughout the course of the presentation as they arise. Drop them in. We're definitely going to try to get to answer as many or all of them if we can. We'll have a solid Q&A session at the end. And that'll be the course of the evening. So let's get into it. Please join me in welcoming Tej Kang from Door Insight. Tej, over to you. The floor is yours.
Yeah, no, thanks so much, Steve, for the great introduction there. So yeah, we're gonna just jump right into it. I'm gonna go over some slides here that'll give you a great picture of what's going on in the market. Okay, so I'll start with nationally, what's happening in Canada, Canada-wide. So what we're seeing is price trends. Prices are trending flat or down in most markets, just in terms of home prices. Sales volumes are pretty flat. Inventory is rising in a lot of places. We're close to a buyer's market here overall, and this plays into rental strategy depending on where you're located. And so I think what we're seeing in many of these regions is people are using it's kind of a wait and see approach at this point, waiting for new government policies, tariff issues, really figure out what's happening with the economy. Is it going to stabilize a bit? Really, they're looking into when they should commit to buying. So, because of this, we're seeing that there's very little sales activity this year. It's way down in a lot of markets. So, I'll show you that in the next slide here. So this chart gives you a quick picture of what's going on with a few of these larger markets in Canada. Toronto and Vancouver, they're pulling back, but you see cities like Edmonton, Calgary, Saskatoon, Montreal, they're showing pretty decent and strong growth in terms of prices. And in some cases, they'll have a lot of population inflow as well, which we'll jump into. But you can see here, like sales numbers are way down in Toronto as well as Vancouver and Calgary as well. So there's a lot less movement in the market at this point.
Tej, when you're seeing numbers down like that in markets like Toronto, Vancouver, I see London is down. Are there areas of the country where you're still seeing fairly robust activity?
Yeah, I think in the generally what I'm seeing, no. I mean, from the numbers here, what we're seeing is maybe Winnipeg has been fairly hot market. There's still been a lot of listings moving there, but generally across the board, we're seeing not a lot of sales activity just because buyers are, I think, just spooked. There's a lot of changes in the economy, especially in the past like 6 months, since the changes in the presidency in the States. There's been a lot of tariff fears and whatnot. So overall, we're not really seeing a lot of activity anywhere in Canada.
Okay.
Okay, and yeah, so here are just a few news articles coming out that I thought were pretty interesting. It's about Ontario mortgages and the delinquency records, the delinquency numbers reaching almost record numbers, but yeah, there's a lot of mortgages that were taken out during the pandemic. They're quite large, and now's the time for renewal for a lot of these. So, there's the delinquency numbers are quite high now. Fairly, like if you look at the actual number, it's only 0.24% of mortgages, but it's a bit of a concerning trend. So it's something to keep an eye on. But this is pretty fresh um, news that just came out recently.
Yeah, this is the renewal cliff that everybody was talking about. I think a lot of people thought the renewal cliff wasn't going to happen because interest rates came down, but I guess what we're seeing right now, it kind of quietly started happening, and now it's kind of making the news.
For sure, for sure. Okay, so next up, I have a chart of median rents that we've pulled out from our website. Uh, a few things stand out here. Toronto and Vancouver, of course, are still the most expensive markets in terms of rent, but rent growth is slowing in these markets, so they might be reaching affordability limits there. Calgary has gained momentum. It offers pretty, relatively strong rent for its price point, and it's become quite popular for migration, which we'll go into a little bit later. Yeah, and I've met a few families who are new to the country who initially immigrated to the GTA. They stayed in the GTA for a few years, and now they've either moved out west somewhere, or in Ontario, smaller cities in Ontario. They're looking for that affordability, and that seems to be the trend now. And you'll see that with some of the migration numbers. So yeah, in terms of other cities, Windsor's fairly stable. It's one of the few cities in Ontario where there's still possibility for cash flow. Montreal stable in terms of their rent. Um, it's trending downward a bit, but the home prices are actually going up a bit. And Waterloo, that market somewhat volatile. It's likely because there's seasonality there. Student market, it changes with the student market. Okay, next up, here's a quick view of rent stats on our website. So it's an area on our website where you can view how rents are doing, how the trends are for many cities across Canada. Here you can see Toronto slightly down, but is mostly stable over the past year. Not any huge changes over for the 1 and 2 bedroom condo market there.
Tej, question that just came up in the chat, just regarding the rental data. It's from Keaton, and they're asking, is the rental data actual rents from PBRs and secondary units, or are these asking rents?
So yeah, I can clarify that. These are asking rents. It's a aggregation of asking rents from many different listing websites.
Okay.
Yeah, but also we also track all the markdowns as Tej will show on the next few slides. So w when there's markdowns in the rent, that's usually an indicator that okay, prices are dropping, and we take those into account into these numbers as well.
Great, thank you. And just to participants, please continue to add questions. We may not get to all of them right now, but we'll try to get to them at the end as well. So please continue to add questions into the Q&A chat. That'd be great. Thank you.
Yeah, so on that note, here's a quick example of a Mississauga condo property that's been, reducing their rents over the past few months. So you can actually see these listings on our platform and the details here. So, we're seeing a lot of these prices drop in the market, and talking to property managers out east, they've told us that listings sometimes sit quite a while, as they need to start reducing prices to get traction on a listing.
And Tej, this is an example of a one bedroom. My understanding is that that's where so much of the pressure is, particularly in Toronto and to some degree in Vancouver as well. Like, are people switching to purpose-built rentals? What do you think this is implying, I guess, for the Toronto condo rental market?
I think there's families out there that are looking for larger spaces. One bedroom's really it's expensive, and it's hard to cut it, with the amount of space that you get. So, and we've built so much, in terms of condos, so
Mhm.
many one bedroom condos, mostly for that investor market, which work great. But, yeah, I think that's where you're saying there's just the inventories is just massive right now.
Yeah, and it's going to continue coming online as well. So, I mean, there's only one way to go for Toronto condos, and GTA condos is pretty much down at this point.
Um,
For the one bedroom, mostly one bedroom and maybe two bedroom. We think that on the three bedroom side, like there's so much demand for it because, as Taj was mentioning, people need more space. So there's still strong demand for anything bigger than like a two bedroom or more. So, yeah.
There's another question from the chat from Anna. Why is it in my area? And this is maybe harkening back a bit more to your pricing slides, Tej, but why is it in my area houses go up for sale and shortly thereafter are sold when the trend is down? That's the question.
Yeah, that could just be that the listing was priced at the right number. If you have a listing that's far above what the market's actually looking for, then it can sit for quite a while, and then it becomes stale, and it just becomes an unattractive listing. But if it's priced well, it may move pretty quickly. Like there's still opportunities out there.
Yeah, even if it's a condo and you got the right price, it's gonna move, right?
Yeah.
It's just that there's so many condo sellers right now that are they're overly optimistic, and their mindset on prices is still like from a year or 2 years ago. And at some point, reality has to set in, and once it does, you end up lowering the price and it sells. Also, especially in GTA, you got like areas like Oakville and Mississauga where it doesn't matter, right? It doesn't matter what's happening anywhere else. Like stuff there is always going to sell. Those are just more desirable neighborhoods.
Yeah, I think as I mentioned to you guys, I literally just bought a new house last week,
Yeah.
and so I've been watching sort of different pockets very closely. And to back to your question, Anna, there's certain pockets that seem to be quite robust and are not really being affected to the same degree. And then there are other areas outside of those core pockets where you're really seeing like really long listing times, multiple reductions in price. So I think it really depends. There are micro markets within a big place like the
Yeah.
GTA, for example.
For sure. Yeah. Oh, that's a great question. So yeah, next slide here. So on our platform, if you were to do a search, in this case, downtown Toronto, this is just another example of where we're seeing a lot of listings with price drops. Um, so here's a full list of, some of the listings that we're seeing where, a lot of them are just trending downward. Either they were priced a little bit too high and they need to keep adjusting that price down to move it. That's usually the case. So, yeah, this is just a quick example of what's going on that we're seeing.
Yeah, the one bedroom is like it's a fight down to 2000 basically. Right now it's probably sitting like anywhere between 2100 and 2350 as the a metric showed, but we're seeing markdowns for a lot of places all the way down to like 2000. So
Mhm.
for a one bath.
For sure. So next up, yeah, I just wanted to just quickly go over kind of the interprovincial migration trends for the last year. So these numbers are from 2024. So what we're seeing is, Alberta had a massive increase in the amount of people coming over, mostly from Ontario and BC, a net gain of 43,000 people. So that was some record numbers that came out west. And, yeah, I've seen it firsthand. And yeah, I'm actually based in Calgary, so yeah, I've seen the difference in the amount of people coming out west. It's been massive. Um, and there's definitely a push towards, with newcomers, like I mentioned earlier, who either they're not well established in their cities, like larger cities like Vancouver, Toronto, or they can't find an affordable place to live. They're seeking out newer, different spots where they can make a living and still have something affordable.
And if I'm a housing provider, Tej, and I'm thinking about the implications of migration, so for example, there's been lots of in-migration to Alberta, Calgary, Edmonton. Does that mean it's a potentially better investment for me to be purchasing or building in those markets, or what's your take on that?
Yeah, so it can be. It's a little complicated. We go into it a bit here with tariffs. There's a bit of risk with Alberta on the tariff side if things stay the way they are or get worse on that end.
Mhm.
Also, Alberta generally, you know, can build pretty quickly, uh,
Mhm.
you know, build housing stock a lot faster, and there's a lot less red tape, a lot less land restrictions as well. We're
Mhm.
not, landlocked, or we're not locked in by like an island or, the Golden Horseshoe. Like we don't have any restrictions that way.
Mhm.
So I think that ends up keeping prices a little bit more subdued, and we've already seen like some really big increases. But um, yeah, I will end up highlighting some of those potential spots. And Alberta still there's value there. So yeah, I don't know if that answers your question. There's definitely
Yeah,
some.
Yeah,
yeah,
but
I
it
think.
yeah.
Sorry, go ahead.
Sorry, I was just gonna say, yeah, it's known for overreactions. Like Calgary's known for overreactions, and you know, I think that because it's such a boom and bust economy that there might be another situation where, people got excited and started buying up everything in Calgary, and now we might see that, there's more than enough supply, and rents might come down, and which we kind of saw a little bit, and
Mhm.
sales numbers probably going to come down, and as people look for other places to potentially find a job. They are I know, you can correct me if I'm wrong, Tej, but like I know they're trying to diversify now, um, into other things to try to not be so reliant on the oil and gas industry, but we don't know how long that's going to take, right? I The one hopeful thing is that we are looking at an economy where everyone's kind of working remotely. So Calgary's like beautiful and it's a great place to live if you're a remote worker. So maybe, I don't know the stats, but maybe that's part of the people that are moving out there, right? Because if they can work remote and live in like beautiful nature, like why wouldn't you? And potentially get a somewhat cheaper house. Um,
There's definitely a big push towards diversifying over here,
yeah.
because of how hard Alberta was hit with the last time oil kind of tanked. So I think there's been some progress there for sure. Compared to like 10 years ago, it's a lot more diversified.
Great. I noticed some people are dropping questions into the chat, which is okay, but it would be if you could try to put them into the Q&A, because that way we can aggregate them. And one of the things we want to do is if we don't get to answer every question tonight on the call because we run out of time, we are going to make sure we follow up with everyone and provide answers to all the questions that we get to this evening. So But it's really going to be easier to do that if they're in the Q&A section of the Zoom. So you can try to just remember that as we're going forward. That'd be much appreciated. Um, Having said that, question from Shankar for you guys at Door Insight. Sorry, not a question from Shankar. A question from Frank. Have you just started developing predictive models of where market opportunities exist, such as ones based on large models? For example, will 2027 be good for the Maritimes, and will the West's market surges fade? So, question for you, whether to answer tonight or to think about and take away.
Uh, yeah, maybe I can try to take that. Yeah, we have been working on predictive models for different aspects of the market. Just that it's very difficult because there's so many moving parts, especially in a situation like this that we're in right now. Like, who knew that we are gonna be in a tariff war, right? So there's so many gears that you have to account for. So it's gonna be tough. But I don't know, Tej, do you have any insight on that?
Yeah, I mean it's something we're looking to develop, but it's not yeah, it's pretty there's a lot of variables right now. So it's not as simple like Harbind mentioned. Pretty wild variables right now. So yeah, it's definitely difficult to predict where the Maritimes will be.
And we're going to get into some of those variables, I think, later in this presentation.
Yep.
Great. Okay. Thanks, guys.
Okay, so looking at the second half of the year, rental outlooks here. So in general, I don't we don't see that we're going to see some giant spikes in rent and that demand there. Nor will we likely see giant decreases in rental pricing. So what we're seeing is mostly generally flat for the next the short term here, the next 6 months. We may see a little bit of increase in Ottawa, maybe in Kitchener, Waterloo, but nothing too crazy from what we're seeing. If interest rates drop, home buyers, if they're still cautious, quarter four, you could see stronger rental demand, especially in cities with rising populations and limited family rentals. If there's not a lot of three-bedroom or two 3-bedroom places that are available that might and that demand from families is there, then you might see a little bit of an increase there for those markets. So yeah, next up, I just wanted to highlight some potential opportunities for investors that we saw for cash flow, and then as well as for appreciation, which I'll go into the next slide. But in terms of cash flow, I'll just mention a few of these cities. So Edmonton, it's low price to rent ratio, lots of listings, very steady tenant demand there. Again, it's a growing city, and other cities in the Maritimes. You have Regina, sorry, not the Maritimes, the Prairies here. You have Regina, low price entry, very stable economy, solid rent. You have Winnipeg, strong tenant base, consistent returns there. And you have Red Deer, which is fairly underrated. It's between Edmonton and Calgary, and between two large cities there. And then going out to Ontario, we have Windsor, London, Brantford. They're all, some potential cash flowing spots in Ontario. They have low property prices, either stable or rising rents, and you know, they're some of the few places in Ontario where you can still yield potentially 5% or more.
And those are approximate signs, not negative signs, right? At the bottom.
Yeah, that's right.
Approximate. Yeah.
Those are approximations.
Yeah.
Yeah. Just to be clear.
That wouldn't be good.
Yeah.
Okay, and yeah, just a couple places to highlight for opportunities for investors here. So long-term appreciation, if we're looking at population growth, economic expansion. So Calgary, we talked about a little bit, diversifying economy. Prices are still low for what you get. It's a large city in Canada. We don't have a lot of very large cities in Canada. So the caveat here is, you know, they will highlight this later on, but the tariffs, potential tariffs, and a trade war could affect the city pretty significantly. So that's a major caveat for now. And then you look at a couple other cities here. Saskatoon, rent demand is up there. The home prices are rising. Smaller city, but it continues to grow. And then you have Moncton, New Brunswick, still undervalued. If you compare it to a place like Halifax, it's quite a bit cheaper. And they have decent migration going on there as well. And then, oh, in Ontario, we have Peterborough. It's a good long-term bet. Still affordable. It's attracting families, some students, and it has limited new housing supply. Not a lot being built there. And that spillover from the GTA may continue over the next 5 to 10 years. So, you can have a steady appreciation there. It's also fairly close to the GTA, so it's attractive for small landlords that are based in the Toronto area, as you can manage the property within driving distance. So that's a nice perk there. Okay, I'll hand it off to Harbin. He'll fill you in on what's going on with tariffs.
All right.
Great. Thanks,
Awesome.
Tej.
Thanks, Tej. So yeah, tariffs, like the giant elephant in the room. So I think initially we all thought that Trump was bluffing when he said he's going to put all these tariffs on everybody. And we thought it was a negotiation tactic, just to kind of like get some balance to it, trade imbalances that he felt the U.S. had with other countries. But it seems like a lot of these are here to stay, and that's what it looks like so far. And we're definitely seeing this in the economy, and it is sending shockwaves in certain industries. Like for example, most recently in the latest unemployment report, we saw that a lot of manufacturing companies that were depending on trade with the U.S. started laying off people. Even in Oshawa, I think there was a report about one of the auto manufacturers laying off, doing more layoffs essentially. Um, but yeah, this is definitely something to be wary of, and like we're definitely watching this closely as we do our analysis on the housing market, especially. Like some of the things that it's affecting is pretty broad. You know, a lot of the construction costs for housing are also going to be going up because of this, and they already have. Um, so it's definitely a pickle. When it comes to automotive, though, we do have, and especially in Ontario, we do have a strong automotive manufacturing economy. There are reports that a lot of that stuff is CUSMA compliant, which is the free trade agreement that they have. And in 2024, they estimated that 90% of the trade that Canada was sending to the US in terms of automotive was CUSMA compliant. So there may not be, too much concern there for that industry. However, there was that Oshawa plant that started laying off people. So, it could go either way. When it comes to energy, obviously, places like Calgary, St. John, New Brunswick are definitely super impacted. If you go to the next page. Yeah, and this is some of the fear the media is kind of putting into the public with articles like this. For example, BMO started lowering their total debt service ratios um, for people who own companies in steel and aluminum, and they're probably going to do that for employees that work in that industry as well because it's so heavily impacted by the tariffs. Um, and overall, in our economy broadly, it's estimated that 12% of our total workforce depends on trade with the U.S. So that's kind of scary, especially since in the last unemployment report from StatsCan, we went up to 6.9% from 6.7. But that's they're always undercounting that stuff. So in a lot of places, we're seeing unemployment rates of like 12%, depending on the city. So for example, Toronto, I think seasonally adjusted last 3 months is like 9.6% or something. So I mean, this is definitely a cause for concern, and we do think that the unemployment rate is going to keep going up. Yeah, next slide, please. Yeah, so what does this overall picture look like? So essentially, yeah, we're expecting unemployment because of that 12% reliance on U.S. exports. We're expecting higher construction costs for housing due to all those materials for the houses that we need to import from the U.S. Um, and we're seeing, as we mentioned with the prices of the declines in the housing market, people are just fearful. They don't know what to expect. They don't know if people are going to start losing their jobs because of this as we move forward. So that's why we're seeing so much hesitation in the housing market. Um, we're also seeing, you know, we're gonna see less like in the long term, we're gonna see less supply because of all this. Yeah, in the short term, we have like this abundance of condos in Toronto and Vancouver that nobody wants. But at some point, those are gonna get bought up, right? And essentially, rents are gonna go back up, and then we're gonna be kind of in the same situation we were in before. And I'll get to the government housing policies in a second, but we have there's not a lot of optimism in terms of more housing supply in the market. And for the most part, in the next year or so, we are seeing this uncertainty in rents. So we do think there's going to be further declines, for example, in the Toronto and Vancouver condo market. But other places, in terms of rent, they're somewhat stable. Maybe they're declining a little bit, but for the most part, they are pretty stable. And after this kind of 1 maybe 2 year period, we're gonna start to see. I think we're gonna start to see increases in rent again, and they're gonna go back to kind of where they were last year, essentially. Um, yeah. Can you go to the next slide, please? Yeah, so what do you do in this kind of situation, right? Like there's so many factors to consider. So the Canadian Chamber of Commerce actually did a report on, which cities in Canada are affected heavily and are sensitive to US tariffs. For example, key energy exporters like Calgary and St. John were top of the list for, be careful because they're not super diversified. They also talked about like the manufacturing hubs along the 401 in Ontario. So that's like the automotive manufacturers, steel producers in Hamilton, and Quebec has a pretty strong aluminum and forestry industry. So these are all places that are, hiring, a lot of our workforce and are gonna be, super affected by all of this. If you go to the next slide here, you'll see that they put together a really nice chart of that basically shows how much trade every city does with the US and how dependent their local economies are on that trade. So the cities in the top right, they do a lot of trade with the US, but their economies are not super diversified, so they rely a lot on it. So places like St. John is like top of it. So that if you're worried about tariffs, like do not probably not a good idea to invest in St. John unless it's like a no-brainer. Because if the tariffs continue, then it may spell, not such good news for St. John because they're not as diversified. Calgary is working its way toward diversification, but like according to this, it's still like 80% dependent on that US trade, right? So that's really not a good sign. The the cities to the right, but lower, those might be a little bit of a safer bet. For example, Hamilton. Yes, their steel industry is super affected by it, but their steel industry is not as big as it used to be, and they've successfully diversified their economy. The people that live in Hamilton, they're not, most of them probably do not work in steel, right? So that would be something that's, it's going to continue to be a generally robust place to invest, in our opinion. Yeah. Go to the next.
Harbin, there is a
Yep.
question from Mebs in the chat, just in the Q&A. Would uncertainties of tariffs create greater rental opportunities? And I think I'm gleaning from what you're saying is short term, no, there's a lot of uncertainty and there's potential for unemployment and there's potential for consumer lack of confidence and whatnot. But
Yeah.
in the medium to longer term, you're also saying that because of the tariff implications, cost of building, speed of development is all going to slow down. The cost of building is going to go up, speed of development is going to slow down. So supply is going to start feeling the constraints of that. So short term, no, but medium to longer term, you see it potentially rebounding, I think is what I'm hearing.
Yeah, potentially. If we can work out some deals with the US on these tariffs, yeah, definitely that we could potentially see a rebound. And if you believe that, you could probably look at this as an opportunity and say, hey, you know what? I really like the fundamentals of this city, and people are just really fearful right now
Mhm.
of these tariffs, and I know that this is gonna be solved in a year or two, so maybe it's a good time to invest, and yeah, so it depends on how you look at it. You definitely got to do your research, right? I mean, the most uncertain part about all this is the tariffs, right? We really don't know what's going to happen. The fact is our economy is so dependent on the U.S. that it's hard. It's hard to
Mhm.
figure out what's going to happen. So yeah, you got to do your homework, right? Yeah, that brings us to government housing. So with our new prime minister, he's putting forth this Build Canada Homes plan. Um, and yeah, their goal basically is to invest $25 billion to finance innovative prefabricated home builders and another 10 billion in low cost financing and capital for affordable home builders. One thing that they already did is they created the a GST rebate for first time home buyers, $1 million or under, I believe, buying new builds. That's a lot, right? So we think that that might not have much of an impact, because unless you're a person that falls into that situation, we don't know how much that's really going to help the economy, especially when we look at the prices of the cost of building these homes now. Like a developer, is just going to say, you know what, like, yeah, we get this GST rebate or whatever, but at the same time, my costs have gone up now. So there's not much I can do with the price. So we're waiting for more information to come out on that, but yeah, we don't have a lot of faith in that, and we don't know how much it's going to help. If you go to the next slide here, we have a meme. Uh, just kind of like put some perspective onto this. We're not conspiracy theorists or anything. We actually think modular homes are very innovative. Prefabricated homes are very innovative, and we think it can really work to bring down the cost of housing. But you know, I think it's I think it's fair for some people to lose faith in their government after just like a lot of policies with a lot of fluff, but don't really end up making a large impact on the housing economy. So yeah, if you go to the next slide. So yeah, so where does all this leave us essentially? Taking all this information into account, the banks have made their own predictions of where this is going to take us. So most of the banks, so the next Bank of Canada meeting is June 4th. So most of the banks think that there's going to be a cut. We're at 2.75% on the overnight lending rate for Bank of Canada right now. So only Scotiabank is saying that there might not be a cut, but most everyone else is thinking that there may be a cut. And but the thing is, by the last quarter of 2026, most banks think we're kind of going to be pretty much where we are right now. Maybe 25 to 50 basis points lower on the lending rate. So, you know, especially with the last inflation report, we saw that there was some bad news masked in good news. So the overall inflation number was only 1.7%, which went down from like 2.2 or something in April. But that was because the carbon pricing was removed. So when you exclude the energy pricing discounts, our inflation actually went up. So prices of grocery and shelter actually ticked up. So we're looking at like 2.9%. So that really spooked the bond markets. So, why does this matter, right? Well, the 5-year fixed rates for mortgages are essentially linked directly with the 5-year Bank of Canada Treasury bond yield. So if that basically what you guys have probably noticed as well, that banks started kind of increasing their fixed rates a little bit too in that situation. So they're definitely scared, and maybe they're gonna come back and change these numbers as well, looking into the future after that last report, because I think these numbers are from about maybe a month ago. So I'm sure they're going to be revising these numbers, and the picture might look worse for Q4 2026 if you have a variable mortgage. Steve, I I know you're going to ask me a question on which way this should they go, on variable or fixed.
Or
What do you
fixed.
what do you think?
I'd be more inclined on variable personally, just because I think, as you say, while the Bank of Canada rate is coming down, that isn't the primary driver of the fixed rate. It's the bond market, and the bond market's been spooked more lately than it has been in a very long time. So I'd be more comfortable right now on fixed. Do you agree with that? Oh, sorry. I'd be more
Variable.
comfortable right now on variable, not on.
Yeah,
Yeah.
yeah, definitely. I just renewed and I went variable just because, I looked at this and I'm like, okay, there's a solid chance that the variable rate will, keep coming down. So I think it's for now it's a good bet.
Mhm.
Um, yeah, and hopefully we can get the inflation stuff under control. Yeah. Yeah, this is one point about I'm not an economist at all, not even close, but the Bank of Canada did have some concerns about hedge funds buying up all of our treasury bonds. That's an entire conversation on its own, but that that's also a chance for a potential. It does add more risk to our economy because in times of a difficult economy, they're going to be the first ones to dump those bonds, and then that could eventually lead to more inflation in our economy and higher rates. But I'll leave that alone for now. So what are the closing thoughts? Where does that leave us? So yeah, if you're an investor or looking to purchase a property for investment purposes, I'd probably focus on areas with good job markets and a strong rental economy that isn't sensitive to these tariffs, because we don't know what the future brings and we don't know where all this is going to go. Um, Supply is going to be constricted for the foreseeable future, due to increased building costs and just the lack of ability of people to, take on the risk of buying something so expensive. Replacement costs for like condo buildings are are pretty high. So like I think we're not going to see once this condo supply gets soaked up by the market. I don't think a lot of builders are going to be super keen on building condos for a little while at least. And in that market, we're going to see rent pressure continue to push downward. But once the supply issues arise again, that trend is going to be reversed too. Um, we don't know a timeline, maybe 2 years, who knows? Um, what are the opportunities here? So, as someone mentioned, maybe, taking advantage of all this information and taking advantage of the fear in the market, especially if you believe that, there's a place with solid fundamentals and they're just experiencing, a down market right now and there's some fear in the economy. Maybe that's a good place to invest, right? But you definitely need to look at the fundamentals and look at the sensitivity to tariffs. It's something that we never really used to think about before. Sensitivity to tariffs. It's definitely a new thing that as investors we need to factor into our pro formas essentially. Yeah, yeah. I think I'll leave it there. And
Great.
we'll open the floor to
Yeah, thank you. Thank you very much, Harbin and Tej as well. So obviously we've got some questions in the chat. I'm going to try to get through as many of them as we can. Maybe just before we do that, I'm going to just remind people we will be sending this recording out to everybody who is registered. We'll also follow up with the presentation itself. Um, And if we don't get to your question this evening, like there may be some questions that are very platform specific to FrontLobby or Door Insight, we will follow up with you directly on those questions as well. So and if anybody is interested in booking a call with the FrontLobby team, please just grab this QR code either now or when we send the presentation out to you as a follow-up. So maybe if we could just look, I'm just looking through some of the questions. Uh, Garden suites, increasingly popular. This is from Justin. Some potentially attractive financing for these. Does a one bedroom, one bathroom, 400 garden suite fare better than a one bedroom condo? Any thoughts? I don't know if you guys are segmenting to that level. You probably, I assume you probably are. Any
Is
thoughts around garden suite versus a condo?
Yeah, I'm curious if they mean fare better in terms of just in terms of rent pricing or
Yeah, rent pricing and the ability to to get it rented out at a good market rate.
Yeah, I think it depends on where you are. I think in a place like downtown Toronto, where there's sometimes you have like those situations where it kind of becomes like a separate unit. Um, I think in those places you could probably see a situation where it's pretty similar to a condo rent if it's like a one bed one bath. Um, but yeah, we're not particularly tracking those right now, but we are seeing a lot of them pop up in our stats. But yeah, for example, if you're in the suburbs, there's absolutely it's gonna be tough for a ADU, especially the ones that we're thinking like these smaller ones here. Those ones are gonna be tough to get the same rate as a condo, just because you are segmented into kind of the backyard. But every property is different. I've seen properties in Hamilton where they're able to build a little bit larger ADUs and they look like completely separate units and they do really well. So honestly, it's a case-to-case situation for those.
Great, thank you. Question from Frank for you guys as well. Does your system allow you to look at individual cities beyond the five you listed for Ontario? Can you drill down into individual cities in the Door Insight platform?
yeah, yeah, absolutely. Like we you can actually go on the site and you can see rental trends like that the chart that I showed earlier for lots of cities across Canada. And then within our platform, we have coverage across Canada, so you can go deep on pretty much any city.
Yeah, we can go down to the neighborhood level in any city in the country, pretty much.
Great. Okay. Do you track short-term rentals like cottage rentals at all in the platform? Is that another area where people can find data and insights?
Not yet. We are potentially planning on adding that in the foreseeable future, but for now, we just track long-term rents.
Okay.
Yeah, I
Uh,
did see that question, forecast for short-term rentals. And, just this is more just opinion, but I think a lot of Canadians they're not booking vacations out to the States. So a lot of that money, a lot of that time, people are looking to still go on vacation somewhere. So I think there's going to be decent demand for cottages in Ontario and in Canada.
okay. Um, There's a question around how long you can pursue a debt from an order 6 years ago for a past tenant. It is a little bit. 6 years is right at the outside limit, and it depends to some degree on where you are in the country. I think some of the provinces are different, but generally 6 years is the outside limit. So anything beyond that is passing that. Let me see what other questions do we have here. Natalia, you've asked a question about utilities not paid with an order. Definitely book a call with our FrontLobby rep, and we can walk you through how you can do that today on the platform, how you can input that information on the platform. Let's see, what else do we have? recently seeing lots of tenants looking for shared accommodations from Shankar. What are the pitfalls or things to keep in mind? I mean, I think the most important thing there, Shankar, from our perspective, is that all of the tenants are on the lease, that are not minors, obviously, but that all of the tenants are on the lease because they are then equally responsible for all of the lease items as well as all the addendums. So make sure they're all signatures, and so that they will share in the responsibility of every one of them is responsible for the full rental amount in that case. And so that would be one piece of advice. I don't know if you guys have anything else to add to that.
I know, yeah, you guys are experts on that, so we listen to you
Okay.
on that one.
Um, the trend, this is from Giovanna. How do the trends shared for the condo rental market that you shared in your presentation in Toronto change for non-condo rentals like basement apartments, rental homes? And in your platform, can I differentiate between condos, basement apartments, standalone houses, etc.?
Yes.
Yeah, so we can look at the data from a different perspective.
Yeah, you can for sure.
Okay.
And
Because
then yeah,
I
yeah,
think what you were saying earlier on is the biggest downward pressure is specifically in the condos and especially in the small units, single bedrooms and bachelors, that don't have enough space to accommodate a family, and which were overbuilt, which were flipped by investors. That's where the highest amount of available supply is, right? And so nothing else is getting impacted as severely as that niche section of the market in Toronto and to some degree in Vancouver as well.
Yeah,
Um,
definitely.
yeah. I would think, with basements, you still have a decent amount of space, and price points are generally, better than looking at condos. So, um, there's still value there, and I think that market will still hold for a while.
mhm. Joanna has a couple more questions. What is the advice to landlords in Toronto that are struggling to get their home rented with downward rent prices and people renting now? Are there recommended ways to minimize or diversify the risk?
Yeah. Yeah, that's a tough question. Again, it really depends on where you are. Um, some strategies that people have been using is, for example, a lot of places allow a lot of buildings in downtown Toronto allow monthly rentals through platforms like Airbnb. They may not allow short term, but you could still get more rent on a monthly rental through one of those platforms as opposed to you know a long-term a long-term rental and potentially have less risk. But then there's an issue where that's also uncertain too, right? And yeah, so it really depends on where you are. If you're in a tourist area, I think that's a great strategy, potentially utilizing one of those platforms for monthly rentals, which is 20, I believe 29 days or more. And then you don't need a license from the city. Um, but it really depends on where you are. If you're outside of that core area, there still might be some demand, but it's tough to say. Yeah.
Yeah, pricing would be like pricing it right, pricing it that a
Yeah.
number that works for, you see other comparables that match that, then it'll move faster. But if it's priced a bit too high over the market, then it's going to be slow to move.
Mhm. Anna has a question. How does the LTV view FrontLobby? Um, Great question. So I think we don't interact directly with the LTV, but anecdotally, I think they're very supportive of what we're doing with FrontLobby in terms of reporting rent, both to help tenants build credit, but also to hold delinquent tenants accountable, which is kind of more the area that they play in. We also have had a full review from the Office of the Privacy Commissioner at FrontLobby, and they've issued a report as well. They're fully supportive of the approach that we've taken, and they've vetted kind of every aspect of the platform. And we've been through regulatory reviews in Ontario and Alberta and whatnot as well. So I think in general, it's very positive. It's a balanced approach that FrontLobby is taking in terms of helping responsible tenants build credit, but also holding delinquent tenants accountable. I've said another question, is this a good time to sell a rental property in detached house in the Waterloo area? Maybe I'll pass that back to you guys.
Yeah, I mean, definitely depends on when you bought it as well and what your goals are with
Yeah.
to sell it. Like if you're planning to buy in a different market, it might make sense. But if you're, it really depends. Yeah, what are you going to do with that money? If you're putting it into investments, that's another option. But I guess maybe reading along the lines is maybe the question is, has Waterloo area kind of reached a sort of peak, and is this a good time to sell? Is that if that's the question, it's definitely a little bit on the downward side. Like the peaks for Southern Ontario definitely were, during that 2022 time period. So yeah, I mean, it's hard for us to give that advice on.
Yeah, if it was me and and I was able to make the rent and you know take care of my finances and my finances are okay, then I think a place like Waterloo is potentially, in my opinion, this is only my opinion, it's potentially worth holding on to because they do have a strong student economy too. Like University of Waterloo, I don't think is going to go anywhere for a long time. But they also have a very strong, because of that, they have a strong startup economy with tech companies there. So a lot of high earners in that city. So if the if the cash flow is decent, then it'd be something that I'd be looking to potentially hold on to. But everyone's situation is different, so it's really difficult to say.
I'm realizing that we are now just past 8 o'clock. I know Tej and Harbind and I are happy to stay on a little bit longer to continue to answer questions. Although not, we can't expect everybody that's participating to be able to do that as well. So just again to reiterate, we will, if you have your question in the Q&A section of the Zoom, we will be making sure that we do follow up with everybody to answer the questions that we aren't able to address this evening. But feel free to stick around with us. We're gonna carry on for a few more minutes. And see if we can answer a few more questions. So, uh, legally, is it possible to go after the guarantor if rent is not paid by tenants? This is not legal advice, but generally the answer to that is yes. If you want proper legal advice, you should definitely consult with a paralegal or a lawyer. But yes, a guarantor is responsible because they're generally signing on the lease as well. So anybody that's a signator to the lease that is not a minor has the same obligations as anyone else on the lease. Um, let's see what else. The volume of tenants in Ontario not paying rent and continuing to live in the unit until evicted is skyrocketing. Is there data on this in Ontario? Do we foresee the rights ever changing to give landlords more protection against losses caused by this? Any advice for landlords in these situations? Yeah, so it's a big question, a bunch of parts to it there. For sure, Ontario is a difficult market for evictions. Everybody is aware of the LTB and the delays. And I think there was an earlier question, is the eviction time frame slowing? And reality is not really. The throughput is increasing at the LTB. They have hired a bunch more adjudicators, but the backlog is also increasing at the same time. So the time periods are not really shifting. That's one of the reasons why FrontLobby came into existence is what do you do in that 6 to 8 month stretch between the time that you realize your tenant is not going to ever continue to pay you rent, and you get an eviction order and get them out of the property. Well, thing you can do is you can start reporting them to the credit bureaus. And when you do that, you have some leverage to say, look, you're going to have a tough time renting your next property. You're going to have a tough time with your next car loan. You're going to have a tough time with your credit card limits because I'm now impacting your credit score. So I would say start right away with rent reporting. Let's see if what the rest of that questions. And then, do we ever foresee the rights changing? It's a very good question, and it's a tough one to answer. Obviously, there are advocacy groups. We work a lot with Solo in Ontario, for example, Small Ownership Landlords of Ontario, advocating on behalf of landlords. We're starting to do some advocating at the government level on behalf of small landlords in Ontario and elsewhere. But tenants have a lot of votes, and it's a political game, so it's really hard to predict whether or not whose voice is going to be loudest. There's no question in my mind that the pendulum has swung away from landlords in Ontario. It's a tenant friendly regulatory environment, and it needs to shift back towards the landlords. But I can't predict that it will happen. Frank is asking how far back we can report rent to FrontLobby. Generally, Frank, we recommend 6 years would be the outside limit in terms of so if you have a former tenant that has a debt, for example, we can't report to the bureaus much beyond that. So generally, that's the outside limit is 6 years. I think it's 7 in the US. Meb's question: if two tenants sign leases and 2 months after one tenant leaves, can the outgoing tenant be responsible for rent? What are the options? Yeah, I mean, the short answer is yes. If they've signed a lease, it depends on the nature of the lease. If they're in a 12-month lease, they're responsible until the end of that lease. If they've already been past 12 months, and I guess in this case, it's 2 months after, so they're not. So yeah, they are responsible for the remainder of the months on the lease, just as much as the other tenant is. They can work with you to try to come to a sublet arrangement to bring somebody in to replace them. But again, that's up to you to decide whether you're going to approve that replacement or not, and they need to do that formally and in writing. But otherwise, they are responsible for rent, and if they don't pay, both tenants are on the hook in that scenario, Mebs, and both tenants can be reported to the credit bureaus for not paying rent, for not paying the full rent. So, yeah, there are some options there. Let's see if I missed.
Yeah, I think Anthony had a question about Niagara.
Okay, great.
Yeah, I could probably. We haven't looked a lot into the Niagara region, but we do know that applications for student applications submitted to um, these universities have gone down. I think there was like a 50% decrease from last year in January. January this year, there was around a 50% decrease from last year. If I have my numbers right, that might be wrong. Don't quote me on that. But I know it's been a decrease in student population. Just the fact that we think that a lot of these places are becoming less desirable to go to school because of all the tough stories that people are kind of sharing with people back home. So what I would look at in a place like Niagara or Niagara College is what percentage of that student population is are international students essentially. And if it's a really high amount, then you really got to look at those application numbers and see if that's going to be sustained or not. Because if it's especially a place like Welland, if it's really reliant on that, then you know you don't want to potentially purchase something there right now for a student rental, maybe because you look at the numbers and you're like, hey, like less and less students are coming in. So, what are the prospects going to look like here? Is it going to be tough for me to find enough students to fill this entire place? And with student rentals, you also get a lot of turnover. So you got to keep uh, switching finding new places. So it's definitely, I would think it's much more hands-on than a normal rental, that you rent to a family. So that's something to be careful about. But yeah, other than that, I think, doing your research and looking at the numbers, looking at the region, how is there migration to that area? Might be a potential thing to look at. But yeah, so a lot of factors.
There's a similar question here that I missed earlier. It's in the chat about Belleville, Ontario. Now, not so much a university town, but I guess in some ways similar to Peterborough, has some reasonable proximity to the GTA. It is not a commute, easy commute, but again, if you're a remote worker and you're doing a couple of days a week, I don't know what your data is saying specifically on Belleville, but is it is it does it have similar benefits to some places like Guelph and London and Peterborough in the sense that it's close to the GTA, but obviously not impacted in the same way.
Yeah, I haven't specifically looked at Belleville. I can't really recall. I don't know, Tej, you have any insight on that?
But anybody that's on your platform could drill down and look at the details
Yeah,
of that.
exactly. Yeah.
Okay. Andrew, I think also had another question. How does debt recovery from an evicted tenant work? So, Andrew, on the FrontLobby platform, we have a product which is basically former tenant debt reporting, which you can purchase. It's a one-time purchase to report on a former tenant who has left you with a delinquency, and we will try to reach out to that tenant. So we will ask you for an email address. We'll try to reach out to that tenant. We'll inform them that they're going to be reported to the bureaus, and that we'll inform them every month that they are being reported as well, and that their credit is being impacted. And we'll try to convince them to negotiate a payment back to you in that case. And as I said earlier, you can report anybody up to 6 years after the departure from your unit. You need to have some basic information on that individual, and so that the credit bureaus can actually identify them and match them to a credit file. So you need first name, last name, date of birth, an address, and minimum address of where they lived when you were renting to them. Okay, let's see. I think maybe we'll wrap it up here, and I hope we got to most people's questions. I'm sure there are a few that we missed. But thank you all so much. I hope that this was good. I hope this was good insights for you and a good use of your time. Obviously, we had quite a few people attend, and I appreciate that. Looks like there's still more than 40 people in the meeting with us. So thanks for hanging on late. And as I said, we will be following up with not just a recording of this. We're also going to send out some special offers to all of you who participated. So look for that tomorrow. It'll be coming to your inbox, and we will do some follow up. And remember, there's a QR code in the follow up that's coming if you want to book a call at FrontLobby. And there's contact information if you want to reach out to us as well. So really appreciate everybody being here tonight. Tej and Harbind, thank you so much. Really some great insights. Thanks for sharing a little bit of the data that you are pulling out of your platform every day. Hopefully some people can really appreciate how they can get in there and dig even deeper and find out some of the very specifics about the places that are important to them and their business. So I think we'll wrap it here. Thanks again, everyone, for coming. And we look forward. We're going to continue with an ongoing series of webinars that we're going to be putting together. So stay tuned for more. And again, look in your inboxes tomorrow. We'll have a follow-up recording, and we'll have some offers for you as well. So thanks, everyone, and have a great night.
Thank you.
Thank you. Thanks, everyone.